The global economy stands at a crossroads. Gold prices are soaring, trade tensions simmer, the US dollar shows signs of weakness, interest rates are climbing. These factors create both challenges and opportunities for investors. This essay will explore why reinvesting gold profits back into the economy is a sound strategy in these uncertain times. This approach can potentially mitigate risks and drive future growth. This essay will examine the forces shaping the current economic landscape. It will analyze the factors behind the rising price of gold. We will delve into the impact of trade tariffs and the fluctuating US dollar. Additionally, we will explore the role of interest rates in this complex equation. By understanding these dynamics, investors can make informed decisions about their portfolios. Reinvesting gold profits strategically can help bolster specific sectors. This, in turn, can contribute to overall economic resilience. In times of uncertainty, informed investment decisions are paramount. Gold has long been regarded as a safe haven asset. In times of economic turmoil, investors naturally gravitate towards its stability. Recent years have witnessed a surge in gold prices, reaching unprecedented heights. This surge is driven by a confluence of factors. The current geopolitical climate is one significant driver. Trade tensions and political uncertainties fuel anxieties about global stability. Investors seek refuge in gold as a hedge against potential downturns. The precious metal acts as a buffer against market volatility. Furthermore, central banks around the world are increasing their gold reserves. This trend further contributes to the upward pressure on gold prices. The basic laws of supply and demand are at play. Increased demand coupled with limited supply inevitably leads to higher prices. Trade wars and escalating tariffs inject a significant degree of uncertainty into the global economy. Businesses and investors alike become wary of potential disruptions to supply chains and trade flows. This climate of uncertainty further strengthens the appeal of gold. When tariffs are imposed, the cost of imported goods rises. This can lead to inflation, eroding the purchasing power of currencies. Gold, being a tangible asset with intrinsic value, tends to hold its value during inflationary periods. This characteristic makes it an attractive hedge against inflation. Moreover, trade wars can stifle economic growth. They can lead to reduced trade volumes and dampen business investment. In such an environment, gold's safe haven status is amplified. Investors view it as a store of value that can weather economic storms. The US dollar plays a pivotal role in the global financial system. It serves as the world's reserve currency. However, recent years have witnessed a decline in the dollar's value relative to other major currencies. This weakening of the dollar has further propelled gold prices upward. Gold is typically priced in US dollars. Therefore, when the dollar weakens, gold becomes relatively cheaper for buyers using other currencies. This price differential can lead to increased demand for gold from international investors. This dynamic contributes to the upward pressure on gold prices. Furthermore, a weakening dollar can be a symptom of broader economic concerns. Investors may interpret it as a sign of potential inflation or reduced confidence in the US economy. Consequently, they may turn to gold as a safe haven. Section 5. Navigating higher interest rates. Interest rates are another crucial factor influencing the investment landscape. When interest rates rise, the cost of borrowing money increases. This can have a dampening effect on economic activity, making gold a more attractive investment. Higher interest rates can make it more expensive for businesses to invest and expand. This can lead to slower economic growth, potentially increasing the appeal of gold as a safe haven asset. However, it's important to note that the relationship between interest rates and gold prices is not always straightforward. Other factors such as inflation expectations and overall market sentiment also play a role. In the current environment, the safe haven appeal of gold appears to outweigh the impact of rising interest rates. Section 6. Reinvesting gold profits, a prudent strategy. Given the current economic climate, characterized by high gold prices, it's prudent to consider reinvesting profits from gold into other asset classes. This strategy allows investors to capitalize on gold's recent surge while diversifying their portfolios. Reinvesting gold profits can offer several advantages. First, it can help mitigate the risks associated with having a concentrated investment in a single asset class. Second, it allows investors to potentially benefit from growth in other sectors of the economy. When selecting sectors for reinvestment, it's essential to consider those that are well-positioned to withstand economic uncertainty. Sectors with strong fundamentals, such as healthcare, technology, and consumer staples, can be attractive options. Section 7. Investing in a turbulent landscape. Where to turn. In this era of tariffs and economic uncertainty, discerning investors seek havens for their capital. While gold provides a measure of stability, diversifying into strategic sectors can enhance returns and mitigate risks. Companies like Newmont Gold, a leading gold mining corporation, stand to benefit from the ongoing demand for precious metals. Their performance often correlates with gold prices, offering investors leveraged exposure. Valero Energy, primarily focused on the U.S. market, provides a buffer against international trade tensions. Their domestic focus shields them from the immediate impacts of tariffs and global trade disputes. Comcast, a media and technology giant, operates largely within the U.S., reducing exposure to global trade volatility. Their subscriber-based model provides a degree of revenue predictability in uncertain times. Apollo Global Management, specializing in distressed debt and turnarounds, can thrive in volatile markets. Their expertise lies in identifying undervalued assets and navigating complex financial situations. GE Healthcare Technologies, a healthcare provider with domestic manufacturing, benefits from a non-cyclical demand for medical services. Their focus on healthcare provides resilience against economic downturns. Investing in such companies with their robust fundamentals and strategic positioning can provide a measure of stability amidst uncertainty. Diversifying across sectors with varying risk profiles further strengthens a portfolio's resilience. Section 8. Beyond stocks. Exploring other gold investment avenues. Beyond traditional stocks, a spectrum of gold-related investment vehicles exists, each catering to different risk appetites and investment strategies. Physical gold, in the form of bars or coins, provides tangible ownership and a historical sense of security. Holding physical gold, however, incurs storage costs and lacks the liquidity of other investment options. Gold tracker funds and ETFs offer a convenient way to gain exposure to the price of gold without the hassle of physical ownership. These funds track the price of gold, providing investors with a simplified way to participate in its fluctuations. Digital gold, a relatively new entrant, allows investors to buy, sell, and hold gold digitally. This approach offers convenience and accessibility, appealing to tech-savvy investors comfortable with digital assets. British legal tender coins, such as Britannias and sovereigns, offer investors a unique advantage exemption from capital gains tax. This tax advantage can significantly enhance the after-tax returns for UK investors. Section 9. Conclusion. Securing prosperity in an unpredictable world. In an era defined by economic complexity, informed investment decisions are paramount. The confluence of high gold prices, trade tensions, a weakening dollar, and rising interest rates presents unique challenges and opportunities. Reinvesting gold profits back into the economy represents a prudent strategy to navigate this landscape. By strategically allocating capital to sectors with strong fundamentals, investors can potentially mitigate risks and capitalize on emerging opportunities. Diversification across asset classes, including stocks, gold-related investments, and other avenues, further enhances portfolio resilience. A balanced approach, informed by thorough research and a long-term perspective, is key to navigating the complexities of today's global economy. As we venture further into this era of uncertainty, strategic investment decisions will be crucial in securing future prosperity.